Hello everyone. In this video I'm going to demonstrate how to use Morningstar Direct and the new experience in that to screen for investments, and specifically I'm going to be screening for intermediate core bonds, ETFs that invest in those. And so what I've got here is my screening tool I've put together where it gives the ETF category that I'm looking at. In this case, it's domestic bonds, intermediate, 5 to 10 years. It gives the screening variables, whether or not I want them to be higher or lower, and in some cases I'm actually looking for a specific value or a range of values, and I'll put that in there. The weight I'm going to use for this variable in my screening, why I'm using this variable. So in this case, my first one is the expense ratio. We know research shows us that low cost results in higher expected future returns. The second variable I'm looking at is effective duration, because I want the ETF, the interest rate risk or the price risk, to match the category I'm looking at, which is intermediate bonds. The SEC yield, the Securities and Exchange Commission yield, it's a standardized measure of returns over a historic time period. And then the average credit quality, I want high average credit quality. I feel like we're in volatile times right now. I don't want to take on additional credit risk beyond just investing in investment grade bonds. In this case, I want the average credit quality to be AA or better. The Morningstar Direct variables I'm going to use to screen for these are the annual report net expense ratio, the average effective duration survey, and they get this number from a survey of the funds, the SEC yield, and the average effective. Oh, that's the wrong one. The last one here is not an average effective duration survey. It's average credit quality, and that is a variable created by Morningstar after looking at the funds. So we're going to go to Morningstar Direct. We're going to start off by screening for our Morningstar category, the fact that it's an ETF. Down here, I've indicated that I want a passive fund, and so we want to start off, especially if we're using variables like expense ratio, by determining whether or not we want the fund to be passively managed or actively managed. In this case, I want a passively managed fund. I don't see a big benefit in paying managers to select specific bonds. I'd rather them just follow an index that gives me what I want. And the reason why this is important is that actively managed funds will have higher expense ratios. So if I don't indicate this, especially if I want an actively managed fund, I would actually take out all of my actively managed funds by just requesting or wanting a low expense ratio. So my weights here: 40% on the expense ratio, 20% on the duration, 20% on the SEC yield, and then 20% on the average credit quality. So I'm going to go over here to Morningstar Direct. I'll close this out so you can just see where I go from the beginning. I'm going to press the arrow up here in the upper left hand corner and then go to search criteria. I'm going to create new. So I'm going to go to the search criteria. My investment type, I want to change this. I'm only interested in exchange traded funds. And then I'll press update. And just as a note here, I am in Google Chrome. That's the preferred browser for Morningstar Direct. Some of the buttons don't show up well, and there are problems if you're using a different browser sometimes. So I'd recommend using Google Chrome for this. So I have exchange traded funds. I want my Morningstar category. And I'm going to scroll down here. I want to show you two things. The first is that I want to select my intermediate core bonds. There are two options here for intermediate bonds, and I'm only choosing one of them. There's Intermediate Core Bond and there's Intermediate Core Plus Bond. The Core Plus Bond includes some lower credit quality bond ETFs. I'm not interested in those. I want a high credit quality, so I'm not selecting that. But if you want some high yield bond funds, and want to go take a little bit lower credit quality to increase your yield, you'd also want to select Intermediate Core Bond Plus, or maybe just that one by itself. The other thing you want to do is do not select include investments missing this information. You're going to get a whole bunch of stuff that doesn't matter, so don't include that. And then I'm going to add that here. So I've got exchange traded funds, intermediate core bonds. There's two more categories I want to add. The first is that actively versus passively managed. I'm going to put in here actively. It doesn't give a variable for passively managed, but what we can say is, do we want the fund to be actively managed? And the correct answer here is no for passively managed. If I want an actively managed fund, I'd select yes. The last one isn't terribly necessary, but it's useful because to kind of keep out extra funds. Some funds will have multiple issues, so we only want the primary share. And so I want to select yes. And so that's going to be all of the kind of binary variables I have for now to kind of exclude and reduce the number of funds that I'm looking at. So I'm going to select apply. And this is going to give me, and I'm going to minimize this window to give me my grid here. A whole lot of variables, and they don't actually include the ones I'm interested in, at least not very easily here. So I'm going to go up here where there's the little pencil here, edit search criteria. Actually, no, I'm going to go over here to the little pencil down below after data set. And this is where I'm going to put in my variables that I'm going to screen by. Again, my first one was that net expense ratio. So it's the annual report net expense ratio. I want to add that. My second one was the effective duration, and the variable I'm looking at here is the average effective duration survey. So I have average effective duration survey. The next one was the SEC yield. And it gives a definition of the variables here. So this is a calculation based on a 30-day period ending on the last of the previous month. And it's computed by dividing the net investment income per share earned during the period by the maximum offering price per share on the last day of the period. So I want to add that. And then finally, I want to add in the average credit quality. So there's different options here. Hopefully we'll get the right one. We can read the definition here. It's a measure of the overall portfolio credit risk based on a proprietary Morningstar methodology. So I want to add that. So you see here I have 149 data points. I don't want 149 data points. So I'm going to select all of them and deselect the ones that I want to keep. So I want to keep the ticker. I want to keep the Morningstar category. And you can go through these and kind of see if there's ones that you're interested in seeing. But for now, I'm only interested in the variables I'm screening for. So those are the annual net report net expense ratio, the average effective duration survey, the SEC yield, and the average credit quality. Everything else I'm going to throw in the trash here. I'm going to delete selected. I'm going to highlight, I'm going to select all of these, and then I'm going to press done. And it will generate a new grid for me with just including the variables I'm interested in. So we see a few where we're missing information. We'll rule those out usually, unless we see one we're really interested in. We can take a look at that one. But by and large, if it doesn't have the information, it means oftentimes the fund is very new, or in this case, there's a survey sent out and they didn't respond to that survey. So now I'm going to go out here. I'm going to export. It's going to take a minute to export this. I'm going to pause the video while it does that. And whenever it comes back, I'll restart the video here and show you how to screen for these within Excel. All right, so now I just got the message that it has completed the export. I'm going to download it. Into Excel. And so this is what it gives me. So my Excel spreadsheet looks like this. There's different ways to handle the data that we have here. I'm going to start with just putting it into quintiles, which is kind of standard, or quartiles, which is kind of standard for our numerical values. And then I'm going to use a binary variable for our average credit quality. So I have 4 different variables here. 3 of them are numerical. I'm going to go down here, and I don't have a lot of funds here, but just to show you, how to deal with having a lot of funds, numerically, I'm going to put this into quintiles. So I'm going to use, I want for my expense ratio, I want the lowest quintile. For the duration, actually the duration, while it's a numerical value, I'm looking for a specific value. And I put in my sheet between 6 and 7. Actually, there's only 3 options here between 6 and 7, and they might not be the best ones. So, looking at the data here, I might say I want it between 5.5 and 7. I think that's what I'll change that to. If it's a lot lower than that, then I'm not taking on the credit risk, the interest rate risk that I'm interested in. So that's what I'm going to do for that. And then the average credit quality, I said AA or better. So I'm going to give the A's a 1 and the AA is a 1, and anything less than that or non-existent than a 0. But to use the quintiles here, I'm going to put in lowest quintile, also going to put in the median just because I'm interested, and the upper quintile, the highest quintile. So that's going to give me the lowest 20% value, the median, the highest 20% value, and then I'll also put in here the mean, or the average. So we're going to use the percentile function in Excel, and so I'm going to put in here equals percentile, and there's a couple of different options, .exe, .inc, or just percentile. I'm going to use the .exe, the .inc, because I want to include all the observations. The exe excludes the extreme values. So we want to put .inc, open parentheses. I'm going to highlight my array, all of the expense ratios there. And then I'm going to put in 0.20. I'm using the quintiles, so I want the lowest quintile here. The median, and then I'm just going to type in median, nothing fancy here. And then the highest quintile, which is going to be equals percentile .inc, open parentheses, highlight the array there. I'm going to put in 0.80 here. I want the upper 20%. And that gives me a value of 0.2. Then the average. And then I'm going to pull this across. I mentioned before between 6 and 7 for that duration. I'm going to lower that down to 5.5. In this case, it doesn't matter for these calculations, but over in the next section, that's going to be important. And then I'm going to pull this over one more time for that average SEC yield. So now I'm going to take my variables. Here we go. So now I'm going to take my variables, my headings here. I'm going to copy them over. And I want to indicate whether I want them to be higher or lower, or 1 or 0. So my average net expense ratio, I want lower. My average effective duration survey, I want a value of 1, and I'll show you how to get there. Well, actually, I'll put up here value between 5.5 and 7. The average yield credit quality, SEC yield, I want higher. And the average credit quality, I want AA or better. And AA is the highest one we have in our list here. But I just want high credit quality. Okay. So my functions are going to look like this. For the first one, I'm going to put in equals. And sometimes you'll get situations where there are blanks. And so I don't want to give them a score because if I give them a score, then I might be looking at some funds that I don't want to include. So I'm going to put in here equals if. And if it's a blank area, I want it to just give me a 0 back. So equals. Then I'm going to put in quotation marks, space, quotation marks, comma. If that's true, not a period, a comma. There we go. If that's true, it's a 0. If it's false, then I want it to take a look at it and tell me if it's greater than or equal to less than or equal to the value down here for the percentile, 20th percentile. So if D4 is less than or equal to the value down here in our 20th percentile, I'm going to lock that into place. I want it to give me a value of 1. If it's not, then I want a value of 0. And then I'm going to pull that down. I've locked that 20th percentile value in place. And I'm double checking one thing. I want to make sure. I went a little too far there. I want to make sure where it has a blank here. So for this last one here, it was just nothing. And it gave me the right answer here. It gave me a 0. What I didn't want it to do was to tell me that was a good one to choose because it didn't have the information. So for the next one, I'm going to tell it to give me a value of 1 if it's between 5.5 and 7, and a value of 0 if it's not. So in this case, I'm going to use the if and function to get to find out if it's between my two values. So I'm going to put an equals if and I want to know if the value in the effective average effective duration is greater than 5.5, comma, and if the value in E4 is less than 7, close parentheses. If it's true, I want a 1. If it's 0, if it's not, I want a 0. Okay. I'm going to pull that down. Okay. And again, I'm double checking here to make sure that in the cases where this isn't true, I'm getting the correct outcome. So this is a case here where it's 5.38. That's below the amount I want. It's a 0. That's what I want. This is a case where we don't have a value because this was a survey and whoever manages this fund didn't respond to the survey. So that's also a 0. For the SEC average credit quality, again, we're looking for a high value here. And I like to use things like quintiles or quartiles because we don't want to just say, well, the highest value is the best. We want to include that as one of many variables that we're looking at. So in this case, what I'm looking for is whether or not the value for the yield is in the upper 20%. Okay. So I'm going to create this like I did my first variable. I'm going to put an equals if. If it's a blank, then I don't want it to return anything. I want it to return a 0 there. And if it's not a blank, then I want to say, okay, if that SEC yield is greater than or equal to the value in the upper quintile, and I'm going to lock that in place, then I want it to return a 1. And if it's less than that, I'm not interested in it. I want it to return a 0. And what this should produce is about 20% of the outcomes. Give me that value that's above the value of 4.44%. Then my last one is the AA or better average credit quality. Looking at the information here, I can see that the highest is AA. So I'm going to put in here, this is a binary variable, equals if, and again, I'm going to start off with my first test. If that value is equal to just nothing, then I want a 0. And if it is equal to in quotation marks AA, then I want to get a value of 1. If it's not, I want a value of 0. I'm going to pull that down. And again, what I'm looking for here is where it says AA, I want to see a 1 over here. Where it doesn't say AA, I want to see a 0, and that's what I see. So now I'm going to include my weights. And you can include these here in these columns if you want to kind of keep things a little tighter. I'll go ahead and do that. I'm going to put my weights up here. So and then I'm going to put higher or lower in the second row there. So my weights, my annual expense report ratio was 0.40. My other ones were 20%, 20%, and 20%. It's important here that those sum to 1, just so you keep everything consistent. And then what I can do is I can take this formula I have down here, and then I'm going to multiply it by my weight, and I'm going to lock in place that weight. Okay. I'm going to drag that down now. So everywhere there was a 1, that's now going to be a 0.4. And I'm going to do the same thing here. I'm going to multiply that by my weight. And then finally, after I get all these done here, I'm going to sum up my scores. And what I'm looking for is the funds that give me the highest values. So I'm looking here, I get this one. The top value is 0.8. I really wish there was a 1 in there, but there's not. So I have 4 different funds I want to investigate a little bit further. I'm a little, well, actually, 3 of these have the lowest, are in the lowest annual expense ratios. And if you find yourself as you're going through this saying, you know what, it's not giving me the results that I'm really looking for, that's a good place to stop and, indicate whether or not your weights are the correct. Maybe it's really important to me that it has a very low expense ratio, so I may want to up that weight, while the credit quality may not be as important to me. In this case, though, I think I've got a good selection. I'm going to take a look at these 4 investments and then try to kind of get an idea of which ones might be the best option. So I'm going to go out here again, back to Morningstar Direct. My best ones were the State Street Spider Portfolio Aggregate Bond ETF, the Vanguard Interim Term Bond ETF, the Vanguard Total Bond Market ETF, and then finally the Schwab US Aggregate Bond ETF. I'm pushing it over to another screen so I can look at them at the same time. So the first one here was this State Street Spider Portfolio Aggregate Bond ETF. I can pull up the report here on that. So I did not include this as one of my variables, but it is the medalist rating is usually a pretty good thing to look at. So this is a gold medalist rating. It has a Morningstar portfolio risk score of 15, so it's a conservative, and that's kind of what I'm going for. The one because I said, I wish one of them gave me a 1, because that would have been a very clear outcome. The one that I didn't score well on was the SEC yield. The SEC yield on it was 4.26 compared to a upper quintile of 4.44. So not too bad there, not too far off. So it's certainly a good choice. The next one was this BIV, and it was the one that it didn't score well on was the average credit quality. The portfolio score is very similar to the previous one. This is an 18. It had an average credit quality of A instead of AA. So certainly a good option as well. Not a risky stock. They're not invested in risky bonds. Just a little bit lower credit quality than the other one. It also has a gold medalist rating. Again, not something I was screening for, but something that certainly is an indicator of future performance. My next one was BND. This has the same Morningstar portfolio score of 15 as our first one did. It is again a gold medalist rating. The variable it didn't score as well on was that SEC yield, and it was a 4.27, which is just one basis point higher than the other one we were looking at, the first one that we were looking at. So very, very similar fund to the first fund we were looking at. And then finally, the last fund. The last fund we were looking at was this. Sorry. They're in a different order. The Schwab U.S. Aggregate Bond ETF. And the SEC yield on this one was lower than that 80th percentile. I would not probably include that one in my list because it is just a little bit lower than the other two in terms of that SEC yield, but still a good fund. Again, gold medalist rating, Morningstar portfolio risk score. We were looking for a conservative investment for this. 15. A little bit lower on that yield, SEC yield, which is a good predictor of future returns. So I'd probably cut this one out. But the other three look great, kind of depending on what you're going for, but they're all good funds to consider. So that's where I'm going to stop for this video. The goal of creating this system is to have a method of screening for investments that you can communicate to someone else, that it's objective. So in other words, we have an ability to score our investments. We can explain how we did it. We chose, for ratios that we wanted a lower value, we chose the lowest quintile, the lowest 20%. For variables that we want the highest values, we chose ones that were in the highest 20%. And then for other ones, we said we want a high credit quality. Well, we only chose ones, or we weighted ones that had AA quality or better. And then you can also put in the weights and explain where those weights came from. And it's just a good tool to be able to communicate to other people. Please let me know if you have any questions.